Good day. Today we will present our assignment of financial accounting and reporting of a sole proprietorship based on an interview with Nasi Kukus Ketagih. The purpose of this assignment is to study the accounting and recording practices of a sole proprietorship. The objectives are to understand real accounting records and explain the business accounting cycle. Through this assignment, we expect to apply accounting knowledge to a real business and gain practical understanding. As a result, we are able to clearly understand the recording process used by Nasi Kukus Ketagih. However, the information is limited to data provided by the owner and simplified accounting figures. Nasi Kukus Ketagih is a food and beverage business located in Klang. It operates as a sole proprietorship and started in 2018 with an estimated capital of 50,000 ringgit. The main business activity is selling Nasi Kukus meals.
Business characteristic. As a sole proprietorship, the business has unlimited liability, meaning the owner is personally responsible for business debts. All capital is contributed by the owner and all profits belong solely to the owner. Classification of business item. The asset of the business include cash, cooking equipment, and food inventory. Liabilities mainly consist of payables to suppliers. Owner's equity refers to the initial capital. Revenue is generated from food sale, while expenses include ingredients, rental, and utilities.
Hello, I'm Shafi. So moving on to the practical applications, let's look at the accounting cycle of Nasi Kukus Ketagih or NKK. So while NKK is a small-scale F&B business, they still follow a structured 5-step process to ensure their finances are tracked. So let's break down how a plate of Nasi Kukus eventually become a line item in a financial report. So first of all, there is a recording. The cycle begins at the food stall. Every time a customer pays, a transaction occurs. So NKK use a point of sale system to generate a receipt and record sale immediately. They also collect invoice from chicken and rice supplier. They document the receipt and also invoice, which are the primary evidence for every cent moving in and out of the business. So next is the generalizing. At NKK, this is a hybrid process. Sales are automatically logged into the POS system. So chronologically, while expense like small daily purchase are recorded manually in a notebook. Even though it's not a complex journal, it serves the same purpose, which is in a chronological record for daily activities. So then there is a posting to ledger. The data is summarized. NKK transfer the post summaries into a monthly record. So here's they categorize expense. For example, grouping all the electricity bills under the utilities and all meat purchases under ingredient. Because they are small sole proprietorship, this ledger is simplified rather than a complex set of the account. Then, preparing for trial balance. Before the final report, NKK prepared a simplified trial balance. This is essentially a monthly check and balance that lists total sale, total expense, and the remaining cash. It helps the owner ensure that the figure makes sense and no major recording error occur during the month. Then, preparing financial statement. Finally, we reach the output. NKK prepares an income statement using the basic formula, which is sales minus cost equal profit. This allows the owner to evaluate the stall performance and decide if they need to adjust price or cut costs for the next following months. Now, every accounting system has its pros and cons, especially for small business like NKK. Let's look at the strengths and weaknesses of their current recording process. So on the positive side, the use of POS system is a huge advantage. It significantly reduces human calculation errors at the counter and make daily sales tracking effortless. By keeping physical receipt as evidence, they maintain a basic level of accountability that is perfectly suited for a small-scale F&B operation. However, there's a gap. The manual recording expense in a notebook is a major risk. It's easy to lose a notebook or forget an entry because they don't use a full double entry system. It is much harder to detect sophisticated errors. There's also a limited internal control system, meaning the business is highly dependent on the owner diligence. If a record or the receipt is lost, then that expense is effectively disappear from the record. So in summary, NKK has a functional system, but there is definitely room to digitalize their expense tracking to match the efficiency of their sales system.
Based on our findings, several improvements can be suggested for the accounting recording process at Nasi Kukus Ketagih. The business may consider using basis accounting software to replace manual record and integrate expenses recording with the existing POS system. Implementing a system double entry system and preparing monthly financial report will improve accuracy and support better business decisions. In conclusion, the assignment helped us understand how real through proprietorship records financial transactions. Proper accounting records are important for monitoring performance and supporting business decisions.